Good morning, welcome to Bitcoin Bounce. My name is Joseph and today I am here with Dion. So in 2 weeks from now is the Ethereum merge. And so there's expectation for Ethereum to have a big spike to the upside, then to pull back again after the news came out, and then over the next 6 months to steady but slowly to creep up and to continue up. And so there's a lot of money to be made in Ethereum today. And so I thought before we all just jump in and take all the money and buy Ethereum, let's listen to CryptoCasey as she explains to us what is Ethereum. Now, before we jump into listening to her, I want to ask Dion to just quickly tell us where is Ethereum today and where do you think it's going?
Hi, morning guys. We can just have a look at the daily chart of Ethereum here. So the past few days we've already had a 15% run on Ethereum from this last bottom. We've got the ETH demand zone here. The important target or zones for us is 1.5 is our support zone, 1.750 is where that demand zone is, and the 2,000 is our current resistance, but I suspect we're going to just fly through that when just before this merge. And then just to show you the effect of the demand zone on ETH, the previous times out of that we've just had these massive spikes to the upside. Always out of that zone. You can see the zone is down here, so we're expecting just on the back of all the good news for Ethereum that we're just going to fly from this zone. Well, that's what everyone expects. That's it, Joseph.
Okay, awesome. Thank you, Dion. Yeah, so I think $2,500 Ethereum is very possible in the near future from right now. And what's the price now? We are Ethereum, it's like 1.5 in that region, eh? Let's quickly look here.
Yes, yeah.
Yeah, okay, 1.5, okay, it went up a little bit. Yesterday was below 1.5, now it's 1.587. So the expectation is for Ethereum to probably go up with another $1,000. So there's huge profit potential over quite a short amount of time. I also want to recommend to you, once Ethereum went up after the merge, it's probably a good time then to take profit because the expectation is that after that big spike it will have a correction before it will then start with a steady slow run to the upside. Okay, so yeah, I want to quickly read through the list of questions that CryptoCasey is going to talk about, and then what I'll do is I will divide the video up in little bits of segments that you can actually go and you can look at those specific questions as you go through the video. I think it's going to be educational. You're going to learn a lot. Okay, so the first question is, what is Ethereum? And so when she starts to explain Ethereum, she also says this is what the blockchain is and this is what Ethereum is. And so there is an Ethereum. Ethereum's quite a bit different than Bitcoin. You know, Bitcoin is a way of holding value, but Ethereum is actually a platform where apps can be built.
Vitalik Buterin is a Russian-Canadian programmer and cryptocurrency researcher who came up with the idea for Ethereum in 2013, which finally went live in 2015. The most plain and simple explanation of Ethereum can be broken down into 2 words: software, platform. Now, what makes Ethereum different from other software platforms is that it's a blockchain-based software platform. So what is blockchain? The most plain and simple explanation of blockchain is that it's records of data stored on networks of computers. And there are 3 pillars of blockchain that make it unique: decentralization, transparency, and immutability. So, to summarize the 3 pillars of blockchain technology, blockchain's recording and storage protocols make it such that once new data is verified, it is unmodifiable, it's distributed across a vast network of computers around the world, so it's hard to destroy, and no one person or entity controls the data or network, creating a completely transparent environment. Awesome. Now that you're familiar with some of blockchain's important features, let's talk about the role blockchain plays in Bitcoin and Ethereum. Bitcoin and Ethereum are both use cases of blockchain technology with different purposes. Bitcoin is simply a digital currency that people can use as a form of payment to send to and from each other, or hold as a store of value. while Ethereum is basically a programmable blockchain that people can build software on to create valuable products and services or just for fun. And due to the decentralized properties of blockchain technology, the software people can build on Ethereum are called decentralized apps, or dApps for short. And the nature and potential of these decentralized applications, or dApps, has inspired the idea and desire for a crusade towards decentralized finance, or DeFi for short. The DeFi movement aims to transform the current financial system into a more transparent and trustworthy system.
And so then she also asked the question, what is Ether? So Ether is a lot more similar to Bitcoin. Ether is actually in the Ethereum network. Ether is the part that's actually the money. Okay, so Ethereum is actually the platform where you can build programs, and then the money that works on the Ethereum platform is Ether.
Many people commonly use the words Ether and Ethereum interchangeably when they are actually two different things. Ether is the Ethereum blockchain's native cryptocurrency. It operates similarly to Bitcoin in that it's a digital currency that can be transferred to people around the world, used as a form of payment, or act as a store of value. However, Ether was created for an entirely different purpose. So why does Ether exist? In previous videos, I explained the similarities between Bitcoin and gold. So if Bitcoin is digital gold, Ether could be described as digital oil. Ether was designed with the intention of fueling the Ethereum network. Going back to the decentralized pillar of blockchain technology, we discussed how open source software is distributed across a vast network of computers around the world. To incentivize people to host and maintain the data on the blockchain, Ether was created as a form of payment to fuel the Ethereum network. So anyone who wants to build a software application on the Ethereum network has to pay for the computing power and space required using Ether. And the amount of Ether required for network fees is determined by a built-in pricing system known as gas. Two other key differences between Bitcoin and Ether is that Bitcoin has a fixed supply and halving events, while Ether currently does not. A fixed supply and halving events protect cryptocurrencies from inflation, and a cap on the supply of Ether may or may not be implemented in the future. We shall see what the future holds.
And she asked about gas fees. Okay, so gas fees is interesting. That's actually the money that the miners receive. Now, gas fees is going to change completely after the ETH 2.0 merge. And then how does the Ethereum network work? That's very, very interesting. All of that is decentralized, and that's what makes it so wonderful.
Gas considers the bandwidth and space requirements, as well as the computational difficulty of each transaction to calculate the amount of fees it will take to complete. The term gas was created to differentiate the cost of performing transactions on the Ethereum network from the actual value of the Ether currency. So when executing transactions on Ethereum, you will see gas prices denoted in GWE, which stands for GigaWE. GigaWE, which is also referred to as nano ether or just nano, simply represents a fraction of ether to the 9th power. You can think of gigaways to ether as pennies to the US dollar. Similar to how US dollars have pennies, nickels, dimes, and quarters that represent fractions of 1 US dollar, ether has multiple denominations of fractional values, the smallest denomination being WEI or WEI. Here's a chart showing all of the different denominations of ether. So if we look at 1 gigawatt of ether, it's depicted as a decimal point followed by 8 zeros and a 1 in the 9th place. You can see how it would be difficult to determine the amount of ether transactions will cost with all of the decimal places to keep track of. So instead of the gas price for a transaction being, let's say, 0.000000003 ether, you can simply say 3 gigawatt. And since the most common unit of ether reflected in gas prices is gigawatt, that's what denomination of ether is used to represent gas prices. So when initiating a transaction on the Ethereum network, you will see what's called a gas limit. In this field, you can choose to increase or decrease the amount of ether you are willing to spend to complete the transaction. The higher the gas price, the faster the transaction will be processed. And if there's not enough ether to complete the transaction you desire, you will receive an insufficient funds for gas notification or similar. Currently, network processes on Ethereum are completed by miners via a proof-of-work protocol, which involves performing computational work on computer hardware to complete transactions. And miners, which are actually called nodes, are simply computers with software installed on them that connects them to the Ethereum network. Then, using computing power, they process and validate transactions in exchange for Ether. So using the built-in gas system, miners or nodes are able to set minimum amounts of gas prices they are willing to accept to process transactions. And if you don't have enough Ether to cover the gas costs, then no miners will perform the computational work required to complete the transaction.
Then what are smart contracts? And we've used smart contracts in the past. They are awesome.
The term smart contract was actually coined back in 1998 by an American computer scientist named Nick Szabo, who invented the digital currency BitGold 10 years before Bitcoin was created. Szabo's idea was to basically use computer code to execute terms of sophisticated contracts in the buying and selling of securities like options and futures. So smart contracts are just lines of code that dictate the terms of a contract and control the execution of the contract. And with the nature of Ethereum's hardware layer and its blockchain-based software, this creates the perfect, trustworthy digital environment for building and executing smart contracts. Smart contracts have the unique ability to authorize transactions and carry out terms of contracts within a trusted environment, which eliminates the need for a central authority like a government, bank, or legal system. So smart contracts make transactions trackable, transparent, and permanent.
And then what are decentralized apps? So they got a funny word that they use for it. They call it dApps. I don't know, Dion, if you ever heard of dApps, but it's a decentralized. I've heard the word dApps. I just didn't know it's a decentralized app. So yeah.
The application layer is where developers can build and launch third-party decentralized applications, or dApps for short. These applications are decentralized because they operate on Ethereum's decentralized blockchain-based platform. Popular examples of dApps that have been created are CryptoCasey, which is a game, and Augur, which is a prediction market platform. At the time of this video, a total of 2,772 dApps have been launched on the Ethereum network, of which around 1,500 are live. There are several different dApp categories, including games, exchanges, identity, health, property, and much more. At the time of this video, the categories with the most transactions are games and exchanges, while the categories with the most active users are finance and exchanges.
And then she explains what are the ERC20 tokens, which is also interesting.
You've probably heard the term ERC20 before. And before we talk about ERC20, let's talk about what ERC means. ERC is simply an acronym that stands for Ethereum Requests for Comments, and it is similar to BIP, which stands for Bitcoin Improvement Proposal. Since Ethereum and Bitcoin are blockchain-based technologies, there is no one person or entity that is in charge of deciding what new features to add, changes to make, or fixes to implement to the protocols. So ERC is a process that was created as a way for people to contribute information about Ethereum or introduce features to the Ethereum network. ERCs, or Ethereum Requests for Comments, are basically how developers can propose improvements to the network. So the number 20 of ERC20 represents the unique ID number of that particular proposal. So let's talk about what ERC20 is all about. ERC20 is a token standard, which is simply a list of rules that any tokens issued on the Ethereum blockchain must follow. So what are tokens? In the context of Ethereum, tokens are types of cryptocurrencies with different functions that represent an asset or are intended for a specific use that operate on the Ethereum blockchain. So the Ethereum ecosystem allows for the creation, deployment, and circulation of virtual currencies or tokens. And ERC20 proposed the implementation of rules and regulations developers must follow when creating tokens to issue on the Ethereum network. These rules can dictate how the tokens can be transferred, transaction approval methods, user access to the tokens, and the total supply or number of tokens available. So ERC20 basically ensures compatibility of new tokens issued on the Ethereum network. Tokens that currently run on the Ethereum blockchain are referred to as ERC20 tokens. Currently, over 242,000 different tokens have been issued on the Ethereum network. Some of the more popular ERC20 tokens include Tether, Chainlink, VeChain, and BAT, and each token has a different function or utility.
And then what are ICOs? Yeah, do you know what is an ICO?
Yes, the launch of the new coins.
Yeah, so I mean, ICO, most people, if you say ICO, they have no clue what it is. Okay, I don't know what it is.
ICO stands for Initial Coin Offering, which operates similarly to an IPO or initial public offering. An initial public offering refers to when a privately held company decides to offer shares of their company to the public in the form of stock on the stock market. An initial coin offering is the cryptocurrency world's application of this process by issuing tokens that are similar to stocks that sometimes, depending on the utility of the token, have a function within the product or the service. ICOs are used to raise capital through crowdfunding in order to build a product or service typically a startup company wants to bring to market. In fact, Ethereum raised $18 million worth of funds in only 42 days from conducting an ICO back in 2014. At that time, Ether was worth about 30 cents per Ether. Now, at the time of this video, Ether is worth around $270. So while ICOs can be a great way for companies looking to build and offer blockchain-based products and services to secure funding, investing in ICOs is extremely risky. Since there is no regulation of the ICO process, many investors risk losing any funds they allocate towards ICOs due to fraudulent projects, scams, legitimate projects being shut down for one reason or another, or legitimate projects failing. Many times an ICO raises so much capital that the team loses any incentive to go through with the project and instead decides to take the money and abandon the project altogether. For that reason, I do not highly recommend investing in ICOs until more regulations have been implemented that protect investors' interests. Awesome. Now that we are familiar with the ICO process, ERC20 tokens, and how the Ethereum ecosystem works conceptually, let's take a look at what the future holds for this blockchain project.
And then the very last question then is just talking about this whole Ethereum 2.0 merge. Of course, the Ethereum 2.0 merge already started 2 years ago, and they're working in phases, and this is still going to continue for a long time. So this is not a one-day event. This is actually a project over about 5 years of moving Ethereum from Ethereum 1.0 to 2.0.
Later this year, Ethereum will start to undergo a major network update that has been nicknamed Ethereum 2.0, ETH2, and Serenity. Ethereum 2.0 is the final iteration of the Ethereum network's evolution and is set to launch later this year in 2020, which will coincidentally be a few months after the Bitcoin halving event if everything stays on schedule. This update will involve switching from miners processing transactions through proof-of-work protocols to validators processing transactions through what is called proof of stake. In addition, the update will feature sharding, a new virtual machine, and much, much more. One of the main goals of this update is to improve the Ethereum network's efficiency and ability to scale. Ethereum 2.0 will allow the platform to handle the growing demand for dApps and the DeFi movement at large. There are many phases to this massive upgrade. So if everything stays on schedule, it will be a few years until the upgrade is 100% implemented and complete. We will break down the phases of the Ethereum 2.0 upgrade and get into more of the conceptual and technical details in another video. In the meantime, there is a lot of room for growth in this project, as it's still in its infancy developmentally.
Okay, thank you, Dion. This was very informational. I hope you guys enjoyed it. We're going to be back tomorrow morning with another trade and an update on what's happening with Bitcoin and Ethereum. See you tomorrow.
Thank you, man. See you guys on Friday. Cheers.